What's up, guys? Welcome back to Taxes Made Simple. I'm your host, Karlton Dennis, licensed enrolled agent and an avid fan of real estate investing. But today, I got a special video for you guys. I want to share with you my favorite, and when I say my favorite 5 tax write-offs that I take on my tax returns. So what I'm going to do right now is I'm going to go break them down for you so you understand what write-offs is this tax professional taking. I mean, I've been on the internet for quite some time. I speak a lot of game when it comes to real estate. I speak a lot of game when it comes to business, but I want to let you guys know my favorite 5 tax write-offs. So follow me. All right, guys, my first tax deduction that I want to share with you guys, and probably my favorite tax deduction, is my one-of-one Air Jordan Tax Alchemy Dunks. Now, I got to show these to you guys because these were made by a very special artist. His name is Ian, out here in Orange County, California. These one-of-one Dunks were given to me last year, and I have to say, man, these are probably one of my favorite shoes that I ever have. The reason why these are some of my favorite shoes is because this artist that put these together specifically made these for me to speak on stage. I do a lot of public speaking, and typically when I'm doing public speaking, I'm normally wearing dress shoes that are really uncomfortable. And as you guys know, after COVID, a lot of things have changed, and more importantly, my brand has changed. And a part of my brand, I adopted the black and gold colors as a part of Tax Alchemy, and I decided that it was important for me to switch up my style. So what I started doing was I started wearing Air Jordans, and he created these one-of-one Air Jordans for me. Now, the reason why these are super special to me is if you start to look closely at them, you'll notice that these shoes have actually anaconda skin on them. So hopefully Pete is not watching this video. And they're also made with lamb skin on the inside, and there's python skin on the outside. So these shoes have just been completely ripped apart and have been created to match some of my favorite animals and to match some of the swag that I wanted to bring to the table when I'm filming and standing on stage. And they even imprinted the Tax Alchemy logo right at the top, and I can swap those out and put these on future shoes that I wish to buy. So these Air Dunks cost me $4,500 to get these made one-of-one like these, and I wear them on stage only. They're 100% business shoes, and I'm able to write these off because these have been identified as a part of my brand. I've even written it into my operating agreement and logged the meeting notes of when I decided to make the decision to switch up my brand apparel. So when I write these items off on my tax returns, I can write them off with confidence because I know exactly how the IRS would audit me on an expense like this. They would want to know, why would I spend money on shoes like this? How is this a part of my brand or logo? And how would I be able to show that I'm making money off of this? Well, I make money off of every single YouTube video that I post. I make money off of every single speaking event that I go to. And more importantly, I had my logo imprinted on the shoes, which is the most important thing that the IRS is really going to care about when it comes to the audit. And that's why I was able to write these off. These cost about $4,500, led to about $900 in tax savings when you're factoring in my marginal tax rates. All right, my second favorite write-off has to be real estate. The reason why real estate is my favorite write-off, but it's second to my Dunks because I just love shoes and I'm a sneakerhead, is because real estate actually gives me the most amount of tax deductions other than any other thing that I can tell you. When it comes to depreciation, I'm taking depreciation on my short-term rental properties in Florida. I'm taking depreciation on my long-term rental properties in Texas. I'm even taking depreciation on my property that I have here in Long Beach, California. All of these properties have been able to create a loss for me that allows me to offset my W-2 income that I receive from my tax business, as well as my S-corporation income that I receive from all of my flow-through entities. This allows for me to reduce my tax bill, grow my wealth, and be able to pay down my mortgage at the same time because I have tenants who are doing my principal pay down. I will always view real estate as the #1 tax strategy, and I honestly think that it's not going anywhere. Depreciation will be here to stay, and hopefully the next president that we get increases bonus depreciation so I can save even more by purchasing more assets. Real estate is absolutely my #2 favorite tax write-off that I take year over year on my tax returns. All right, guys, let's jump into write-off number 3. My favorite next write-off has to be my all-black 2020 Lamborghini Urus. Now, when I got this car, I'll be honest with you guys, I never thought I'd purchase a Lamborghini. It's a flashy car. It's really, for those entrepreneurs that really want to be flashy, and that wasn't my intention. But when I found out that Lamborghini made a SUV that was over 6,000 pounds, and the IRS implemented IRC code section 179 plus bonus depreciation, I realized that luxury met opportunity, and I decided to purchase a Lamborghini 100% for business, and I 100% write it off inside of my business's tax returns because I utilize that vehicle for ads. What's going on, y'all? This is my 2020 Lamborghini Urus all black, and I have to tell you, it's been one incredible car to drive, but more importantly, it has been incredible tax savings for me and my wife, and it's one of those tax savings that most people would not expect. You see, when you buy a car that's typically a luxury car, the IRS does not allow you to write that off. They actually have a luxury vehicle limit. But the code section IRC 179 plus bonus depreciation allows for you to write off vehicles that are over 6,000 pounds all in 1 year, fitting this Lamborghini Urus into my tax strategy for 2022. Now, if you're thinking about purchasing a vehicle that weighs over 6,000 pounds, you need to make sure that it's at least 50% business use in order to write it off. And now that we're in 2023, unlike in 2022, you can't write off 100% of the purchase price. You're only able to write off 80%. So make sure that you calculate your tax savings ahead of time if you're trying to take write-offs like this, because this one is one of my favorites. Bonus depreciation last year in 2022 was 100%. So when I bought that car right at the end of the year in December, I was able to write off 100% of the purchase price, even though I financed it. I literally only put about $30,000 down on the car, and I got a $280,000 tax deduction that saved me about $95,000 in taxes. So if you look at that spread, it made sense to me to be able to spend the money on something that I wanted that also offsetted my taxable income that's 100% used by business. But here's the thing about 2023. Bonus depreciation's at 80%, and it's going to 60% next year, 40% the year after that, and then 20%. And you guessed it, in 2027, we no longer have bonus depreciation. So I wanted to be able to take advantage of this tax code while it was here, because I believe that it's important for me to get back into real estate with the amount of money that I'm earning. All right, guys, so the home office deduction has to be one of those coveted deductions that most people are fully aware of but don't know how to take. When it comes to the home office deduction, there's really only two ways to take it. You can choose to take the regular method or the simplified method. The reason why I'm not gonna spend a whole lot of time on the simplified method is because I know that if you're on my channel, you're looking for big tax deductions. You're not looking for little itty bitty tax deductions. And the simplified method only lets you write off $1,500 per year. Boring. So I went with the regular method. Yo, the home office deduction has to be one of my favorite deductions, but I want to make sure that I'm in a place where I'm comfortable. As you can see in my home office, I have my desk kind of pushed over to the side. I got dual monitors, got dual cameras, teleprompters. I have really a lot of stuff in here. And this is how you can maximize living at home and being able to get work done, is taking a space in your home that is exclusively used for business and labeling that your office space. Get some content done, film some videos, record, do whatever you need to do. But make sure that it's exclusively used for business and that you're taking the most amount of space that you possibly can as a tax write-off. As you see in my home office, I'm writing off my camera equipment, I'm writing off everything that you see inside of the office in addition to the space. You see, when you write off a home office, you're able to take the square footage of the space and divide it by the entire square footage of your house. That allows for you to get a percentage, and then you can take the percentage of all your expenses every single month. So for me, that's my rent, that's my gas, utilities, electricity, all of these expenses for using that home office gets to be deducted from the total expenses of running the household. And that ends up creating a bigger deduction than the $1,500 that you're left to receive if you decide to take the simplified method. So if you're thinking about taking the home office method, I'm gonna encourage you to take the regular method like I did, and make sure you're getting your square footage written down ahead of time, so that way the calculation becomes easy come tax time. All right, guys, my fifth and favorite tax write-off would have to be my Louis Vuitton travel bag. You see, luxury expenses like this typically aren't meant to be written off, because the IRS is gonna tell you, how is this expense reasonable to your business? But here's the thing that I want you to understand. I marketed myself as an entrepreneur that is a tax strategist for high net worth individuals. High net worth W-2, high net worth sole proprietors, high net worth LLCs, high net worth S-corporations. I work with entrepreneurs that are making millions. I work with entrepreneurs that are making 8 figures. I work with entrepreneurs that are making 9 figures. And because I branded myself as a tax strategist for entrepreneurs who are making money, it's important for me to make sure that my brand meets that requirement. So I purchased luxuries like this Louis Vuitton bag, and I had them embroider my name and my logo onto the bag, so I'm able to use this as a travel backpack for when I'm meeting up with clients out of state or when I'm traveling to different countries to do business for real estate. This is one of the ways in which you're able to create a bigger tax deduction and receive something that you probably really liked that you wanted to purchase. But it's all about how you take the deduction. You see, with Code Section 162A, the IRS states that you're able to take a business deduction that's ordinary in nature, necessary in nature, and reasonable in nature to the business owner in the pursuit of income. So it's up to me as a business owner to justify this expense on my tax returns. If you're trying to write something like this off, you should have the correct approach and the correct explanation of how you would justify this expense being ordinary, necessary, and reasonable to your business. And this is why I choose to write off my LV backpack and why it's one of the musts for me to have as a tax deduction. Listen guys, I've gone over quite a bit of tax write-offs with you today. The rest of the day I'm gonna spend enjoying myself and coming up with other video topics that are gonna be able to help you save money. But if you're watching this right now and you're motivated and you wanna be able to learn about real estate, depreciation, how you can take write-offs, then I encourage you to click on the link below to join the Tax-Free Wealth event. You see, the Tax-Free Wealth event is where I'm teaching my best real estate and tax plays over the course of 5 days. If you would like to be able to have somebody who can help you tax plan, come up with a tax strategy, and for you to get your entity structured correctly, then I would encourage you to show up to these 5 days and make sure you're attentive, because each day we'll be going over something new and be able to help you structure your business or your real estate to avoid W-2 and 1099 taxes. My name is Karlton Dennis. Thank you so much for watching this video, and thank you for making it to the end. If you like this video, go ahead and comment, like, subscribe. You know what it is. I'll see you on the next one.